Hi there. I just wanted to give you a little market update. And I'm sure you've been watching the news and it's been a little unsettling. So I wanted to address it head on with some clarity and some forward looking thoughts. So, what's driving the volatility? Escalating trade tensions is the biggest thing. The tariff escalations, particularly with China, is retaliating. And things are getting to the point where that's ignited a broad market sell-off. So the Dow and the S&P has in the last 2 days dropped nearly 10%, and the Nasdaq is now in bear market territory, having been down over 20% over from its high. Most sectors are down. Energy hit the hardest as oil prices are plunging. Defense sectors like utilities and consumer staples haven't totally escaped the pullback, but they're lesser so. Treasury yields have fallen sharply, which is good, but it also could signal recession concerns. The VIX, which is a key fear index, the volatility index, has surged above 40, which is, sort of a bad territory. And the federal chair, Powell, has had some warnings about growth and inflation. But it's clear that the market is currently in an uncertain risk-off environment. So what do we do, and what do you do as a client of our firm? And this is why it's important to have a risk strategy. So when we look, at our clients and managing money, we look to balance our clients between risk on and risk off investments. This means some of your investments may be subject to current conditions while others will not. So we look ahead and we prepare overall goals and appropriate risk and risk mitigation strategies for you. And we're not trying to time the market. You know, the market uh, is built on a process of risk management in our eyes. We have to manage the risk of the market. So remember, markets can recover as fast as they fall. The current sell-off is significant, but it's important to remember that market corrections don't always lead to prolonged downturns. If there's a resolution to the tariffs, this could rebound very quickly, and as quickly as it declined, it could rebound sharply. History has shown certain examples like 2018, at the end of the year, the correction triggered by the Fed policy fears reversed rapidly in 2019 once the guidance from the Fed shifted. Brexit in 2016 shocked the global markets, but it only lasted a couple of weeks. COVID, we all remember what happened there. We had a swift drop in the market, but surprisingly, in the craziness that was going on, there was a fast recovery of the market. So markets often overreact to geopolitical and trade shocks in the short term, but these disruptions rarely alter long-term earnings potential of diversified companies. So a grounded perspective in periods like this will test investors' patience. But history shows they also reward discipline. So something that I like to quote from Warren Buffett is the stock market is a device for transferring money from the impatient to the patient. And we build portfolios with patience, structure, and long-term discipline. And this way you don't have to overreact emotionally in the heat of the moment. So what's next? We're monitoring conditions closely, and if needed, we will make investment suggestions to you should the data support it. However, if you'd like to discuss your portfolio or other investment choices or opportunities or ask questions, don't hesitate to contact me. I'm here to help you navigate this period with confidence and clarity. And in the meantime, stay patient, stay disciplined, and that's how long term wealth is built. All the best to you, and I look forward to speaking with you soon.